So just a little bit ago, we had some major news that came out for the market. This news is going to determine if we have a recession, if we don't have a recession, if stocks are going to go up, if interest rates are going to go down. I'm going to break down everything in this video for you guys, so here we go. So all the bears that were out there calling for a recession, there's no one buying stuff, Walmart sales are down, they don't know what they're talking about. I also just posted on my X, Walmart earnings beat 67 cents per share versus 64 cents. And their revenue beat also by almost $2 billion. So I feel like Walmart is one of the best gauges of how the economy is doing, especially from like a retail sales perspective, because Walmart is the #1 revenue company in all of America. So I think the Walmart would know if there's weakness in consumer spending or not. July retail sales rose 1% above expectations of 0.4%. So that's a lot stronger than we were expecting. Also, core retail sales are up 0.4 versus 0.1. So the US consumer does remain resilient. And then I said, what recession? I love it when everyone comes out of the woodwork when the stocks dipped the last week or so and they say, recession's coming, we're gonna go to war, the election's gonna ruin everything. All the negative news stories come out when the market is negative. Now today, when the market is up, you're gonna have all the good news stories coming out, and then all the people that were crying wolf saying we're gonna have a massive recession, they go hiding, they go hibernating right now. So right now, shares of Triple Q is up 1.4%. You guys know that I have a huge exposure to Triple Q in my portfolio, and IWM is up over 2%. I also have calls and puts on IWM, as you guys know too. So today on my portfolio, we're up about $23,000. So my peak was 803,000. That was July 31st. I rode that dip all the way down to 659,000, and now we're up to 775. I was talking all day long on my X account and on Discord to buy this dip, and that's what I did. I'll show you a huge purchase of Triple Q that I made right here on this dip. So check this out right here. This is what it all is about right here. So Triple Q, I bought 250 shares here and 9 more shares there. So I got 250 shares. I blew $110,000 on it, and this was on 8/6. Okay, today is August 15th. So 8/6, I paid $440 a share. Right now it's $468 a share. I mean, we're talking a $28 per share profit already on those shares. So that was August 6th. Look at this chart right here. August 5th was the bottom for my portfolio. I bought those on August 6th, and now I rode this bounce up right here. This is what it's all about. You need to be fearful when others are greedy, and you need to be greedy when others are fearful. Right through here, there was a lot of fear. So I bought that dip. I made the bet that the companies in the Triple Q are going to be bigger, better, stronger, more profitable in the future. So when you have this dip right here, when things are 10-15% off, you buy that dip. You buy that discount. If a car is on sale tomorrow, you buy that discount. So I'm going to hop over to CNBC and show you what they're saying about today's report, and we'll comment on it after and see if we agree.
Everything is hitting the wires. Empire Manufacturing for the month of August down 4.7%, and that follows down 6.6%. We have had a lot of negative numbers. Matter of fact, every number this year has been negative. Now let's look at retail sales. Headline number, 1%. Double plus expectations, 1% on a headline number. That's the best going back to April of 22. April of 22. Let's strip out autos, shall we? It diminishes, but still much better than the up 0.1% we were looking for. It comes in at up 0.4. Strip out autos and gas, still up 0.4. The control group, or what we call core retail sales, that is up 0.3. That's a pretty good number, 0.3, and it follows up 0.9. I don't see any revisions yet on the retail sales, but it may be forthcoming. Now let's look at Philly Fed. This is an August number, like Empire. Philly Fed comes in at -7. We're expecting a positive number, -7. Well, we were at -10.6 at the beginning of the year. That is your comp. Now, let's look at initial claims. Initial claims, 227,000. That's definitely below the 235 we're looking for. A slight revision to 234,000 for last month. So that means we are down 7,000, and that is something to watch. It's probably why yields are moving up a bit. Because, of course, this demonstrates the economy might not be slowing as much, and the labor market actually might not be diminishing as much as the jobs report demonstrated. Now let's look at continuing claims. Are we going to have the 10th consecutive month over 1.8 million? Indeed we are. 1,864,000. And finally, a lot of prices coming in. These are July import prices, month over month, up 1/10. We're expecting a down number, up 1/10. That's the biggest positive month over month since April of last year. Strip out petroleum, and it is now up 2/10. Up 2/10 follows up 2/10. And if we look at year over year, those were month over month. Now let's go year over year to import prices, expecting up 1.5%, comes in a bit higher, up 1.6. That equals right now a revision. Last month's 1.6 now becomes up 1.5. But these are some of the juiciest numbers going back to the end of 22. Let's look at export prices month over month, expecting goose egg comes in higher at 0.7. 0.7 equals April of last year. To find a higher, you have to go back to August of 23. And finally, export prices year over year expected up 110. Buckle up. 1.4%. 1.4% is the hottest since January of last year. Now we see that yields pretty much up and equities up. Good news is good news. Some of these, of course, are showing the economy is doing better. Labor market not deteriorating as much, but it is a split decision. Claims on the initial side going down, continuing claims hanging tough. Santoli.
So I kind of like watching him on CNBC just because he's like this funny old guy, but he has good information. Sometimes he doesn't like articulate it good so it's clear to understand month over month and year over year. But what you need to understand is retail sales are strong. So I have read every news article out there from CNBC, Yahoo Finance, and whoever else. I've been waiting patiently for this dip to recover because I didn't even understand why stocks were dipping. What people were saying was because of the Japan carry trade. Well, guess what? That was the first time we've ever even heard about the Japan carry trade, and that might be the last time we ever hear about it. That's already old news. That's done. That didn't pan out to the massive market crash like we thought it was going to be, or at least like what other people thought it was going to be. So then what's the other reason why it dipped? Well, people said the consumer's weak. No one has money. There's no one buying anything. Walmart sales are going to be down. The economy is crashing, and America is a consumer economy. Okay. Walmart sales came in strong. And one of the key things I noticed was I was in Vegas last week, and Vegas was absolutely packed to the max. The streets were packed. The casinos were packed. You couldn't get into a restaurant to eat dinner. I mean, it was packed. And I feel like Vegas is like a sample of the whole economy in the whole world because everyone from all around the world comes to Vegas. So if Vegas is empty, then yeah, I would be concerned, but it's not. It was totally packed out. So I posted this on X this morning. I said, I'm waiting for the bears to come out and say sorry for panicking on this dip. Then I said, if you can't keep your emotions in check on a dip, you shouldn't be in stocks at all. Congrats to everyone that bought the dip with me. That's what it comes down to. Be fearful when others are greedy. Be greedy when others are fearful. So right here, I was fearful. I came out of my other videos saying I'm not selling puts right now. I'm not buying calls when the market was popping. I mean, the market, let me zoom out. I mean, the market was going like straight up. So when I show you guys this chart, like these sharp declines here, sharp decline here, sharp decline here, this is when I pull out of the stock market to buy a house. I buy a house every year. Sometimes I buy 2 houses a year. So when you see these sharper declines, this is when I buy a house. So that's not usually the stock market going down. Going into like the first half of this year, we were just straight up. So I felt like valuations were lofty, so I wasn't selling puts or buying calls. But when the market took this dip, guess what? I bought a bunch of shares of Triple Q and now I'm up a lot on those. So this is the last thing that I want to go over. This is my return for 2023, cumulative return. Now, return could be complicated. So my return was strictly how much money my money made. This does not get affected by if I send money to Schwab. Like if I have 100K in there and then I send another 100K, now it's 200K, so that's 100% ROI. It doesn't work like that. It's literally how much money did I make on the money. So for 2023, my rate of return was 75%. Now most people are going to think that's absolutely crazy, that's astronomical, but that's what it is. I buy the dips, I sell puts, I buy calls, I make options trades when the market says to do it. I don't just trade to trade. Even right here, my net contributions, I had a net withdraw from my account, but it's still up $240,000. So over here, this is my return versus the NASDAQ versus the S&P 500. So you could see all brokerage accounts 75%, S&P 26, NASDAQ 43. So yeah, NASDAQ was way up last year, but I was way up even more. So when you compounded these rates, this account will be millions and millions and millions of dollars. My goal is to have this to $1 million this year. I'm gonna actually leave it on the screen. I'm not gonna refresh anymore because it's 777. It's good luck. But if you wanna learn how I made that 75% ROI, I have a really good video that I'm gonna put at the end of this video. You could click on that. And I'm also gonna put the link in the description below. So make sure you check that out. Also, I have a Discord channel where I post all my live trades, all my market updates, all the earnings reports, all this data that came out in real time. You could check it out there because by the time I record this video and post it, it's probably already a few hours delayed. So if you want it in real time, check it out there. And also, if you made it this far in the video, like and subscribe, and I'll catch you guys later.